If you don't have a high interest savings account, what are you doing? You're literally leaving money on the virtual table. And if you don't have one yet, then luckily now is actually a really great time because interest rates are going up. So let's start with the basics. Most people have at least 2 different bank accounts, a checking and a savings account. Now, usually your checking account's where your income's put in, and it's also what you pay your bills from. So money's basically always going in and out of this one. Then your savings account is for money that you want to save, and usually you'd be using it for a specific purchase that you're saving up for, basically not the day-to-day expenses and bills. Also, a lot of the time people have this checking and savings account at the same bank, or at least they start out that way. Now, typically traditional physical banks want you to use as many of their products, and yes, a bank account is a product to them, as possible because they're a business and that's how they can make the most money. But here's the thing. These accounts at traditional banks are usually expensive, or they're just not the best option out there. Now, this is true of both checking and savings accounts, but we're gonna be focused specifically on savings accounts today. So when you put your money into a savings account, your money is usually just sitting there for a pretty extended period of time. And that's because it's not the money that you're gonna be using day to day. And the thing about money that's just sitting there is that it's losing its value. And we're gonna be talking a little bit more about what that means in just a second. But as a little thank you from your bank for keeping your money with them, they'll typically pay you back in interest. Now, the high level reason that they're even thanking you in the first place is because banks don't actually keep all of the money that you give them sitting there. Instead, they use your money and everyone else's money to invest and make more money. Or maybe they'll loan it out to other customers and make money from the interest payments made back to them. So your money sitting in their bank accounts means that they'll be making a lot of money from you. So then they pay you back this tiny, tiny little piece of it as an incentive. But the thing about these traditional banks is that they don't actually give you back very much money at all. The big 5 banks in Canada specifically all have average interest rates of around 0.1%. Now that would be $5 a year for every $5,000 that you have sitting there. Now the good news is that there are alternatives that offer higher interest rates, like literally 100 times higher or more. And today we're gonna talk more about all of this, including why rates are going up right now and what some of the highest interest rate options are specifically in Canada where we're located. So after you give us a big like down below because it really helps out our channel and we really appreciate it, we'll jump right into it.
So what do we mean when we say that money that's just sitting there is just losing its value? Basically what we're referring to is inflation, and people are really aware of it right now because it's over 7% in Canada and over 8% in the US, and obviously it's higher than our normal 2% that we're used to on a yearly basis. But here's the thing, even when it's not crazy high, inflation is always there and it impacts how far your money goes every single year. Look at it this way, your money's only as valuable as what you could buy with it or how much you could purchase with it, right? So let's say you had $5,000 in a savings account since 2012 with no interest growing on it, it would only be worth $4,100 in 2022, assuming inflation was at the normal 2%. To make it really clear, inflation represents the cost of things becoming more expensive. So, when the price of groceries goes up over time, the exact same amount of food that cost you, let's say $100 in 2012, but now costs you $200 in 2022, that means that if your money isn't growing at that same pace, then you now afford less, obviously, right? And your money doesn't actually go as far. So with the example that we said before, your $5,000 not growing only goes as far as $4,000 instead. So it's losing its value and its ability to actually purchase things. That's why just saving your money for things like, retirement or even the long term isn't very effective, because even when interest rates are, let's say, really high, at best, you're matching the rate of inflation. So if you're not losing some value every single year, you're actually making it really hard for you to maximize how much you can put away. Now, that's why investing is actually really key in order to actually fight inflation and grow your money. But there are times where you need actual savings. Now, the main one is gonna be for your emergency fund, which once again, should be at least enough money to cover 6+ months of any necessary expenses. So at least 6 months. Now, it's important, the reason this is important is because what if, for example, you lose your job unexpectedly, you don't have a way to make money, how would you pay for your next month's bills or the next month? It's definitely stressful if you don't have any, liquid cash, but once again, this is why you should have that money just set aside in case you do need it. Now, you might also want some money in savings for any short-term purchases. So, for example, a car, a vacation, a down payment on a home. And notice that if you are saving up for any short-term purchases, then you'll likely want to use a savings account for that as well.
So what are you supposed to do if you know that inflation eats away at your savings? But at the same time, sometimes you need to have money in savings, either for short-term purchases or for emergencies. Now, ideally, you'd get the highest interest rate option available to you to at least lose the least amount of purchasing power possible, or even maybe match inflation, just not right now. Again, those big traditional banks don't typically have very high rates at all. Actually, they're really low. And this is mostly because they're not even incentivized to raise their rates, because some people are gonna bank with them no matter what. It's either because they don't know what their options are, or they just like the idea of using this one bank for literally everything. Now, to give some specific numbers, let's go through what the big 5 banks are offering right now. So first up is CIBC, and their current interest rate is 0.5%. You're gonna see that as kind of a pattern in just a second. But they do have a current promotion going on right now for 3.25% interest for the first 120 days. So after about 3 months, it goes back to 0.5%. Next up is TD Bank. They have the lowest rate by far at 0.05%, not 0.5, and no current promotions. Then there's Scotiabank, and their rate is 0.55%. Now they also have a current promotion going on, also of 3.25%. Instead of for a certain number of days, it's until December 31st of 2022. So pretty comparable right now to CIBC. The fourth one is BMO, or Bank of Montreal. That one has 0.6% interest with no current promotion. And last up is RBC with 0.5% again, and a current promotion of 2.7% interest for 3 months. So you can see some themes with those current promotions and a few banks that don't have any. Now keep in mind that these rates are what the banks have just raised their interest rates to in the past few months alone. They're all between 0.05% and 0.6%, with those short-term promos for a few of them. Now the reason they do that is because they want you to sign up, but then stay long-term at their lower rate instead. So I think that now is actually a good time to touch on why rates are even going up right now. And we've done a real deep dive in other videos that you can check out after this, but at a high level, interest rates are higher when the central bank or the Bank of Canada wants to encourage you to save your money. So right now, the economy has super high prices and high inflation. I'm sure you've seen that. And to get those prices to go down, there needs to be more supply and less demand. So if people save more and spend less, it lowers demand and prices can ultimately come back down. Now, it's a little bit more complex when it comes to things like food and gas, those essentials that people are gonna need no matter what, but overall, that's what's been happening. So the central bank, or the Bank of Canada, raises the overnight rate, which is the same thing as the federal funds rate, or the rate that banks are charging themselves to borrow money. And they then pass those higher interest rates over to the customers like you. Now, if you look at all of this in reverse, in 2020 when the pandemic hit, they wanted people to spend money to keep businesses running. So interest rates actually went down so that you didn't care as much about saving money.
So the traditional banks don't really raise interest rates all that often or very much at all, but in the last few decades, there's been this huge spike and increase in high interest savings accounts options from other financial institutions and platforms. Now, it's typically from online and digital banks and credit unions, which is really interesting. Now, people are sometimes really unsure about these options because, once again, you've been taught by the older banks and the older generation that they're more secure. But there are 2 important things that we really need to cover here. Number 1, some of the banks are literally backed by the big 5 banks. So for example, if we look at Tangerine, they're powered by Scotiabank and they're equally as secure. Simply Financial, also another one that's with CIBC, so basically the same thing. Now number 2, the reason that traditional banks are secure and protected is because they are CDIC insured by the Canada Deposit Insurance Corporation. So this is an organization that was created by the Canadian government to make sure that if any bank that's protected by them were to fail, your money would be paid back to you for free and automatically by them up to a certain limit per category. Now, many online banks and credit unions are literally just as protected as the big 5 banks, like for example, TD. So as long as you can see this logo on the platform's website or their building, then your money is protected. So what this means is that these alternatives are safe and secure, but another consideration that you might have could be things like how the platform looks or how user-friendly it is. Does it have an app? Customer service? How easy is it to transfer your money? How easy is it to withdraw money? Is there a minimum account balance that you need to have? Are there any additional fees, right? These are all questions. Now, all of these things could differ depending on the specific platform that you're with or bank. So that's where you'd want to do some of the research obviously yourself and decide which savings account you'd actually want to go with on top of which ones have the highest interest rate. Personally, we chose the account that we use, which we'll talk about here in a second, based mostly on having one of the highest interest rates out there. Now, there's also how user-friendly the platform is. We want simple, easy to understand. We don't want issues with transferring money in and out, but make sure you figure out what's most important to you.
Okay, so let's start getting into the fun details here and also cover some of the highest interest rates available in Canada right now. Now, remember that these rates can definitely change, and we've been seeing a lot of these platforms and options continually raise their rates basically every few weeks or so right now, so keep an eye out for that. But as of the time that we're filming this video, here are 12 of the banks and their interest rates. Okay, so I'm gonna be reading this list off my phone to make sure I don't make any mistakes with the interest rates because there's a lot we're gonna go through, but we'll have something up on the screen for you to follow along with too. Now, first up is EQ Bank and their Savings Plus accounts. account. So EQ Bank is an online bank and it's powered by Equitable Bank. Lots of banks that I'm going to be saying right now. But basically what that means is that Equitable Bank's been around for a long time now. They've had a physical presence in the past in Canada, so people know their name from that. And they more recently created EQ Bank, and this is their online-only specific function. So EQ Bank right now, we're going to be talking about this one a little bit more in a second too, but for now they have a 1.65% interest rate, and also their promo right now at the moment is a $150 sign-up bonus. So basically you would get $150 to sign up and then 1.65% interest continually from there. Remember, rates can change, but as of right now. The next one that you've definitely heard us talk about before too is Neo Financial and the Neo Money account. Again, that's their high interest savings account. Now, Neo is a fintech company that's powered by Concerta Bank. So in this case, what it means is that your money would actually be sitting with Concerta Bank that's been around for a while as well. But Neo Financial and Neo Money specifically is the platform that you'd actually be working through online. So it works pretty similar to the other ones. That's just what's going on in the back end. Now, Neo right now has a 1.8% interest rate and a $10 bonus as long as you deposit $50. So in theory, if you have a savings account, you'd have more than $50 in there, and then you'd automatically get a $10 sign-up bonus. So next up is the Simply Financial High Interest Savings Account. So this time, Simply Financial, which you've probably heard us talk about before on the channel too, they're a digital bank, and they're a subsidiary of CIBC. So again, you heard me talk about CIBC before as one of the big 5 traditional banks in Canada, and what they did, and at least one other one that we'll talk about in a second, what they did is they created this subsidiary bank, which is Simply Financial, to have their digital and online presence. So think of it as pretty much the same in the back end, but Simply is the online digital version of CIBC. So in this case, Simply has a 0.1% interest rate, but they have a 3% promo going on until October 31st of 2022. You will see a bit of a difference, like I've noticed this in the next one I'm about to talk about, the ones that are subsidiaries of the traditional banks, even their high interest ones still don't have the highest interest rates, but you might see some promos going on there. So again, 3% till October. The other one that's really similar, like I just mentioned, is Tangerine Savings Accounts. Now, Tangerine is also a digital bank, but they're a subsidiary of Scotiabank, so another one of those traditional big 5 banks. Very similar, they have 0.1% interest rate right now and 3% for your first 5 months. So next on the list is the Coho Saving and Spending Account. Now, Coho is another fintech company, so they're the platform that you'd actually work through and go through, but they're powered by People's Trust. So that's the bank in the back end. You probably heard about Coho a little bit online before too. Their interest rate now is 1.2%, but they have no current promotion going on. And you'll see that theme in just a second. There's a few in a row with no current promo, but Coho is one of them, 1.2% interest. Then there's Oaken Financial Savings Account. They're a digital bank that's powered by Home Bank, if I'm reading this right, and their interest rate is 1.65% with no current promotion. So next up is Laurentian Bank. They're another digital high interest savings account. Again, also a digital bank in general that's backed by Laurentian Bank. This is just the digital specific section of it. They have 1.15% interest right now and also no current promotion. Then there's Motive Financial. Their specific account is called the Savvy Savings Account, one name there. They're another online bank, and they're a division of Canadian Western Bank. Now, they have 2.2% interest right now, getting really up there in the rates, which is good, but no current promotion. And then next up is Savin Financial and their high interest savings account. Now, they're also an online bank, but they're a division of the First Ontario Credit Union. It's the first time we've mentioned credit union on this list too. And they have 2.4% interest, which I believe is the highest interest one that we're going to mention. And in their case, no current promotion, and there is a $25 initial deposit. So you have to open it up with $25, but then there's no minimum balance after that going forward. Okay, so moving on towards the end of the list, next up is the Wealthsimple Cash Account. You guys heard us talk about Wealthsimple when it comes to investing before. This is specific for their cash account. They're also a fintech company, and they're protected by CDIC, and they have a 1% interest rate right now and no current promotion. Sometimes they run promotions, but none at the moment, 1% interest. Then we have Meridian's high interest savings account. Now, Meridian is just a straight credit union, which is awesome. Credit unions are a great option too, especially when it comes to high interest savings accounts. Right now they have 1.25%, and they also have a promotion of 3% for 8 months, which is a pretty good stretch of time. And last up on the list is the Alterna Bank e-savings account. So again, with the e-savings in the name, it's obviously an online bank. In this case, Alterna is a subsidiary of Alterna Savings Credit Union again. So one more credit union to wrap it up. They also have 1.25% interest, but no current promotion going on at the moment. And that's the end of the list. So we both personally have our emergency funds in the EQ Bank Savings Plus account. Now, we've been using them for years now. We like it. We talked about it on the channel before too. We haven't had any issues in the past, and we've seen some great returns from them. So we're planning on continuing to use them. Now, we actually first started using EQ back in early 2020 when they had a rate of 3.25%, which was one of the highest rates in Canada at the time. So we do have that trust that they'll keep offering one of the highest rates in the long term and not just for now. Now, we do also use the Neo Financial Cashback Credit Card. You've heard us talk about that too. And in order to cash out your cash back, you also have to automatically have the Neo Money account too. So we also have that one. We find the platform super user-friendly as well. And if you guys want to use our links to get on $150 or a $10 sign-up bonus on top of earning the interest with those two platforms, we'll make sure we leave those links for you below too. And then obviously you have the rest of the list to choose from and look into as well.
All right, guys, let's wrap on this video. Hopefully we gave you guys a good enough background on, high interest savings accounts, where you can go, which places have some of the highest rates right now, which I think is really key. And yeah, as usual, if you guys haven't already liked the video, make sure you do like down below. Make sure you subscribe right there in the corner. And yeah, make sure you check out our links down below that have the high interest rates that we use. We have the Neo Money account. We also have the EQ Bank account, right? Which are some of the accounts that actually have some of the highest rates. So make sure you check those out. Last but not least, if you haven't already checked out any of our previous videos on money, investing, you name it, make sure you check them out, right? Also, I do want to mention, if you guys have any, any questions, any comments, if you guys have any suggestions on topics you guys want us to cover, make sure you drop them down below in the comment box. And as usual, check out our previous videos next door. We will be back. You know the vibes. Let's go.